Welcome back to Real Estate Live, where your questions get answered. We take a look at the hot topics on everyone's mind. Today, we're going to be talking about first-time homebuyer loans. There's a lot of misinformation out there saying, hey, first-time homebuyer loans are dead. They're gone. There's no down payment assistance. There's no home is possible. Well, I'm here to tell you that's simply not the case. Now, most of the time, right about now, I'd be introducing you to Bill Merren, who's the loan officer that I work with frequently and generally comes on with us to give us the mortgage rate breakdown and also cover the lending side of the hot topic. I do want to disclose up front that I am not a loan officer. However, Bill did send me some information to work with this morning. Unfortunately, he had to rush off to the doctor's office with one of his kids this morning. So we're sending him positive mojo that him and his son are doing well and everything's going to be okay moving forward. Now, fortunately, today we have a rock star agent joining us out of Colorado Springs, Colorado. She's quite fascinating, a nice lady named Sevin Murdock. Well, Sevin, whenever I gave her a call, she's like, hey, Andrew, so that's not exactly how you say my name. You can call me 786, or why don't you just go with Sev? So I'm going to be calling her Sev quite a bit to make sure I don't butcher her name. So let's get Sevin on right now and go ahead and get her introduced to you guys. And then we'll go ahead and get into the hot topics right away. And we'll be taking a look at the Q&A along the way in today's episode. So let's bring Sevin up here. There she is.
Beautiful.
Miss Sevin, thank you for joining us today.
I feel special. I got off mute. Andrew, thank you so much for having me on the show. I really appreciate it. And everyone tuning in, I hope that we can bring you some valuable information here today, something that you can take away and apply maybe to purchase your first home or help a friend do it. So.
Oh, fantastic. And I just noticed that Bill did just join in on the stream. So we're going to bring him on. So it looks like we might have got a saving grace right there, Mr. Merren. Are you there with us?
Good morning, Andrew. Yes, I am. Rocking some civilian clothes.
Oh, my God. Hey, you know what? You had me going. I was putting out the mojo that you had to take care of the boys this morning with one of them going to the doctor, and we were wishing you well. But thanks for coming in. So let's get into your mortgage updates then if you're ready to go.
Yeah, so some really exciting stuff to talk about today, guys, is like Andrew, we talked about last week was a lot of people out there just assuming that, mortgage rates are going through the roof. People can't qualify. Mortgage programs are going away. That's just not the case. That's just simply just not the case at all. With what we have going on right now, there's still a lot of opportunity. Unfortunately, there is some people that are stuck between a rock and a hard place, but the interest rates are still very, very good. Yesterday, unbelievable interest rates. We were locking VA loans well below 3%, which is amazing. We're locking conventional loans, up in the threes. So there definitely is still opportunity out there. And then there is still several down payment assistance options available for people out there that are looking to buy as well. So, but yeah, there is a lot of stuff out there still, Andrew.
Okay, fantastic. And I know that we were talking about those first-time homebuyer loans, and in specific, you gave me a breakdown. And Sev and I were chatting about this and how it works in Colorado Springs. She was sharing with me that she does work with a lot of first-time homebuyers, a lot of them using down payment assistance, and a lot of military in the area too. So she's extremely knowledgeable about the down payment assistance programs available in Colorado. Okay. So we're in great hands with Miss Sev. She is a rock star, superstar agent out of Colorado Springs. But this is one of the things that you gave me and what I was showing her as far as just how many home is possible first-time homebuyer programs are realistically available just here in Nevada. And I know that there's like in kind type programs available across the United States. Is that right?
Yeah, there is down payment assistance, Andrew, is definitely hyper local, right? Because different counties, different cities, they have their own individual programs, different states for sure, because they get their own funding, and that funding goes towards whatever programs they have in line. But there is a lot of similar programs across the country. This just happens to be one of the avenues here in Clark County in Nevada that we can help people out with down payment assistance. And as you can see there, I don't know if you can zoom in on those rates, but man, some of those rates are really, really good. They're all pretty dang good, actually, but the specifically the HIP specialty programs, right there in the middle, talking about the Heroes program, the Teachers program. Really what that's doing is that's for teachers. It's a phenomenal program to where it's helping them get into their home. It's giving them actually a really, really good rate for an FHA loan, 2.75%. And it's also giving them $7,500 towards their down payment and closing costs. So really a great program. The VA loan right now is great. There is the option right there that shows you basically the Heroes loan is getting them just a very good interest rate at 2.75, which is phenomenal. But as I just chatted with you, we're currently locking those right now in just regular VA buyers.
Oh,
See, and
wow.
I think that
So,
one thing that's important to point out here, because I know that a lot of the first-time home buyers that I work with, they see these rates as advertised, and then maybe their
Yep.
credit is a little bit on the lower side of the spectrum, right? And then
Yep.
they are confused because they're not getting the same rate that was advertised. I think it's important to highlight that the rate can fluctuate a little bit just depending on your credit, maybe your debt to income, different things like that, right?
Yeah, absolutely. And that's a really good point because there's we were locking in rates at 2.75 yesterday, but I was also locking rates at 3.5. So
Right.
it just depends on everybody's scenario. So, at somebody that's got a 625 FICO score, probably not going to get that 2.75, but we can get you into a home. But it is going to be a little bit higher of an interest rate because there's a higher risk. So yeah, there's a lot of different scenarios. But most of the time, those rates, good point, the rates you see advertised, see them online, you see them on commercials, you see them wherever you're looking. And the rates that are advertised typically are for top tier credit score, might be with paying a point or two,
Correct.
might not even be a 30-year fixed loan, that kind of stuff. So it is important to kind of look at that from an objective perspective and see, okay, what is my situation? I've got a 625 FICO score. I'm putting 3% down on a conventional loan. Probably not going to be exactly what you're seeing online. So good point for sure.
Right. Exactly.
So one of the big things that really come to mind and why I thought this was so really super important to address is I've heard a lot of misinformation out there from would-be experts and professionals saying, hey, guess what? If you're a first-time home buyer, you're completely out of the game if you need a down payment assistance and the first-time home buyer programs. And I was like, no, that's why we're going live 3 days a week to get out the truth, to get out the reality that that's just not the case, that in fact, they're very much alive and well. Sev?
A lot of guidelines did change, though, for a lot of different lenders and financing types, though, correct?
Yeah, so there have been pretty much across the board guidelines have tightened up with most lenders to protect the lenders and to protect what we're going to be able to do in the future. It is, from what we're seeing, is going to be a temporary thing. It's going to kind of slowly be getting back to what it was before, which we're already starting to see maybe little signs of that. But to Andrew's point, the down payment assistance is there, but a lot of it did go away. So there is a lot of programs that were available at one point that right now, maybe temporarily are no longer available, but there is still options. So it is important to understand that guidelines did tighten up. Yes. Some down payment assistance programs did go away, but by no means does that mean there's no assistance out there, because it definitely is there for people that qualify, for sure.
Absolutely. And I know that, a lot of buyers, they when these changes happened, right? They were scheduled to close the next morning, and the credit requirements with their particular lender changed overnight, and they no longer had funding. But that's not every lender. And this is a perfect example as to why it is so important to shop lenders. You want to be exploring every different financing option that you have available to you, every different interest rate that you have available to you. Be able to talk to these lenders and maybe get some tips on how to get your credit score up so you can get that interest rate and that monthly payment that you're looking for. It is so important to be flexible right now too, just because so many things are changing on a moment to moment notice. And then again, shopping lenders will allow you opportunity for a fallback, because some lenders are not offering these things anymore, but some still are. Some still have amazing programs. So it's important to have, I think, a plan B right now.
It's super important to understand too the type of lender that you're working with, because every lender is not the same. Even though they might be a great guy, they might be great people. I'm sure they're doing awesome business, but they're kind of held down by what their company does and does not allow. So some lenders, they don't have their own funds. They don't even service their own loans. They're mortgage brokers, which are great options in certain times for certain situations. There's lenders that sell all their mortgages. So in those situations, there's the basic guidelines, that they have to, that us lenders kind of go off of, but then there's additional overlays and things that happen. And with now everything that's going on, it's like every other day we turn around and I hear stories, and I have buyers calling me saying, hey, man, my loan officer said he can't do this anymore. Can you help? In most cases I can, but it's important to understand the type of lender that you're working with, because if they're not servicing their own loans, meaning when you close on that loan, if your buyers are not, if the buyers are not getting the mortgage statement from them, they're not going to retain that, then there is probably additional guidelines we're not aware of, and they don't have as much flexibility. So super important to understand.
Absolutely. And really important, especially as a first-time home buyer, to be working with somebody who's going to walk you through the process and be available for you when you do have those questions that need to be answered, when you do need that letter of pre-approval, or you do need to have them reach out to the listing broker and say, what an amazing buyer you are. You know, it is so important to shop lenders and make sure that whoever you fall in line with, like you like them, you feel confident in them, you trust them, because they are ultimately going to play a massive role in getting you to the table.
Yeah, and one thing I say, I know, Andrew, we talked about this last week too, is communication is freaking key right now. It's so important for buyers to communicate with their lender. If you're pre-approved, if you're in contract on a new build, if you are pre-approved out looking for homes, or maybe you're in contract on a 30-day close, pick up the phone and call your loan officer and make sure no guidelines have changed and you're not in a bad spot. Not only that, but any other real estate professionals that might watch this video, man, pick up the phone, call your lenders, call your preferred lenders, call the people that you work with, and make sure these buyers that we did all the work and spent the time and energy to get these to help these people. We want to make sure they're still good to go before we go out there and get them in contract and put them in a bad spot. So, and I know you and I talk a lot about that, but that's super important.
Yeah,
exactly.
Absolutely. That, and like having your realtor and your lender on the same page as well, because there can be a lot of negotiating power that you give up in the transaction if they're not on the same page, if they haven't communicated with each other and said, hey, we got through inspection just fine, go ahead and order the appraisal, right? You know, all of these things are very important, and communication is key, 100%.
Yep. Cool.
Okay, fantastic. So on that note, let's go ahead and get ready to start getting into our Q&A portion. And thank you for those hot topic updates and the wonderful conversation along the way. Before we do, I do want to give out some shout outs to Miss Sev and her Facebook profiles. She is quite the Facebook enthusiast, and she has a good following and posts a lot of fun stuff, I noticed. So you can check her out at Sevin Murdock on Facebook. All of her social profile links are in the show more description below on both Facebook and YouTube. She's also somebody that has been Miss Colorado Springs, and she's done a lot of different series and interviews that are easily findable on her website. And she was most recently named by Riz Media as one of the trendsetters for 2020. That's how I found her, by the way. I was like, hey, let me check out and see what's going on with other top pages. I was like, oh my gosh, she's in Colorado. Wouldn't you know it? Let's get Colorado on here for different perspective for real estate. So that was a really cool article about you right there, too. And she does have Instagram these days. Who doesn't, right? And she has a lot of beautiful homes on her profile to check out. So if you want to follow Sev, you're in Colorado Springs area, please feel free to start following her on her social media, again, in the description below. And thanks again, Sev, for coming on today. So let's go ahead and get into some of the questions that are starting to come in. And as more questions get in, we'll continue to answer them and just talk about exactly what's going on right now with everybody. Pug Love in April, good morning. Thank you, Pug Love in April. You are massively supportive of the live streams and all videos on my channel. Got to tell you, love you long time for that, and thank you for being here. Amber Lynn says, aloha. Aloha, Amber Lynn. I know we've had some back and forth. So, Bill, Amber Lynn had actually hit me up in the comments, and she works in the transportation industry in specific. So she's got all kinds of moving parts in between trying to sell a home, potentially buy a home. Should she be refinancing? And there's a lot of stuff that she's been hitting me up in the comments about. So, Amber Lynn, now is your chance if you're still with us live right now. If you have anything specific, Bill is a loan officer. We have Sev's experience to lean on out of Colorado. We'll make sure that we get to the bottom of any answer that's on your mind today. Willie McIntosh says, hello, all. Ciao. Well, ciao, Willie. Thank you for being here. And JC Garcia. So JC is going to be asking a wonderful question here. JC says, hello, guys. Question. When shopping around for at least 3 mortgage lenders to buy my first home, should I be worried if they pull my credit each time, and will I be affected by it? Now, that's a popular question.
No, you shouldn't.
Have at it.
No,
you shouldn't be worried about it. Just make sure that you know, it'll show up as like one inquiry. as long as they're close to each other, right? So if you have one lender pull your credit 1 month and then 2 months later you have a different lender pull your credit and then maybe 3 months later, well, then you need to be a little bit concerned about it. But if you have a bunch of lenders pull your credit in the same week, it's going to just be one inquiry.
Yeah, that's correct. So that's important to understand, because you don't ever want to feel like you're held down to only one option, to where you, oh my gosh, I had my credit pulled once, I can't go look anywhere else. However, it's also important to understand it does show up as one inquiry initially, but that does catch up with you. I believe it is between 30 to 90 days at some point that does catch up with you, and all those inquiries do show up eventually, but it's meant to happen after you close on your home, and it's not going to affect your purchasing ability. So I wouldn't be concerned about it, but what I would recommend doing is talking to at least 3 mortgage lenders, right? Talking to 3 different mortgage professionals, getting a feel for all of them. And if you like what all 3 have to say and you're confident with what all 3 have to say, then yeah, go ahead and have your credit pulled. If you talk to one of them, they do a great job and they're giving you the best options, you know what your credit score is. At every lender you talk to, they're going to be pulling your credit through different credit vendors, but we're all, for the most part, going to be using the same credit models. Your score is going to be very, very similar. So what I recommend my buyers do, hey, if you want to look at other options, great, but here's your credit score. Don't go out and have it run 5, 6, 7, 8, 9, 10 different times if you don't want to. Here's your score. Go talk to these other 3 guys that I know if you want to get a different quote, and have them give you a quote. They don't need to run your credit just to tell you what programs you might qualify for. If you're going to be doing an actual application, getting fully approved, and then deciding the 11th hour, then yeah, I mean, you would have to do that, but we definitely don't recommend doing that in that situation. So great question, but yes, it does affect your credit as one credit pull initially, so that way it doesn't affect you and kind of hold you down to being tied with one lender for sure.
One thing that is really nice too about having a lender pull your credit is they can see everything that's reporting on your credit. And sometimes you have stuff that's reporting on your credit that's not even yours. Sometimes they have amazing tips and tricks to go ahead and get your credit score up and into a bracket where maybe your interest rate's going to be a little bit lower and it's only going to be a short period of time for you to do that. Credit advice from lenders is amazing because it's free and because you can get as much of it as you want. Okay. Yep. So take advantage of that for sure.
That's a great point. So Janice says, let me get Janice up over here. Janice says, isn't shopping lenders what your loan agent is supposed to be doing?
So loan agent, shopping lender. So what that, I think she's probably asking is if we're a mortgage broker and we have access to a bunch of different options, right? Because we're a mortgage banker at New American Funding. We typically fund our own loans in-house. There is other options for unique situations where I can broker my loans as well and look and see what the different rates and different options are. Typically, our rates in-house are much better, the same if not much better than the broker options as well. So if you do have a unique situation, a unique scenario, and Andrew, I know over the years, man, we do check the broker options to see. So that's a great point. And yes, we do look at all the options and go over those with you if it makes sense.
Sev, did you have anything you wanted to share?
I think that you covered that one. Yeah.
So let's go back on Drew's enthused. Well, I'm enthused, Drew's, that you were able to make it in again today. Thank you for being here. Drew says, hey folks, I'm signing the docs at the title agency today, but my closing date is Friday. I get the keys tomorrow. Am I supposed to start cleaning and moving in tomorrow? Great point. I see you doing this, Sev. Go ahead and have at it.
I mean, if you don't close until Friday, it sounds like what you're doing is you're doing a pre-signing where you're signing before closing. The seller might be signing the day of closing, something like that. Usually what they're going to do is they're going to go ahead and marry those 2 different sets of documents together. But in Colorado, buyer typically takes possession of the property on the day of closing, and they occur all of the expenses beginning on that day, such as utilities, taxes, insurance, everything like that. So unless you have some sort of backdoor deal worked out with the seller where they're letting you move in early, I don't think that you're allowed to do that until Friday. I'm surprised that you're getting the keys early.
That's what I was curious about. So Right. And everything that you just said is actually the same process here in Vegas as far as when you actually get the keys to your house. It's always after the county has had the opportunity to record the actual closing itself the day of the closing. So if he's
Right.
getting the keys, Bruce, the only thing that could come to my mind is if you were going to get the keys tomorrow, maybe you and your buyer agent had negotiated some type of early occupancy agreement, is what that would be
Right.
called, with the seller to allow you to move in earlier. Now, if that wasn't in place, Drew, then you need to talk to your agent, because realistically, you should not be getting your keys until you have the recording confirmation in your area to be able to move into your new home. That's
As
the
a
reality.
seller, I wouldn't be giving keys to anyone unless I had money in my account. You know,
Right,
no
right.
funding, no keys.
How's that go? No funding, no keys.
Yeah,
Funding
yeah.
gives you keys. I think she's coming up with a new hashtag.
Yeah.
Love it. Love it. Great question, Drews. If that answered your question, or if you have any follow-on questions, please let us know. The memory guy means says, Andrew, you're the best. Well, you're the best for being here. And we have nothing but the best on the show today with Sev and Bill Merren. And thank you again, guys and gals, for being here. Morris D says something that I'm really glad that he brought up, because this sometimes is kind of one of those like interesting things when somebody says. So Morris is saying, can you go with two lenders at the same time in parallel and see their interest rate and jump to the which one has a better rate? This is
In
always
theory,
fun.
I
I know we all love it.
So technically, yes, you can do that. Do we recommend it? Obviously, no. You want to make a decision on who you're going to work with earlier on in the process. Get a fair rate quote. Get your rate locked in, and as long as you're confident with them, proceed with closing with them. You know, it's never a good idea to have somebody be working for no reason, because just like in real estate, the real estate profession, on the mortgage lender's profession, as a loan officer, we don't get paid unless we close. So we want to do a good job for you. I've been doing this for 14 years, and I used to see this a lot back in the day before all the changes happened, because what would happen is a lot of lenders would do like a bait and switch. They would change things up at the very end, and all of a sudden, well, man, you said my rate was going to be 3.25, and now it's 5.5. What the heck, man? Sorry, you don't have an option. You have to close anyways. That just doesn't happen anymore, guys. So the idea and the reason people used to do that is because most lenders, do the right thing. But there is a few back in the day who did not, and that few caused a bit of a commotion and a lot of problems for a lot of people, because they didn't do things honestly, they didn't do things ethically, and they changed things up literally at the closing table. So in today's day and age, with the way that the CFPB and TRID and the way we have to do things now, I recommend not doing that. I recommend making that decision up front, who you want to work with, getting an actual interest rate quote. If you're closing on a transaction where it makes sense to lock your loan, and then move forward with closing with that professional. So that's what I recommend. Can you? Yes. Should you? I don't recommend it.
Mm-hmm. Yeah, I mean, and excuse my language, it's kind of a dick move. I mean, you've got someone working really hard for you, two people, right? You've got them invested in you and your transaction, and you're gonna just blow one off altogether, right? It's not a good thing. So this is why it's important to shop up front, right? Like you don't want to be the mean buyer, right? that screwed your team, because it's frustrating. It is.
And I love that you brought it up, and we could get away with going there since you said it. So that was awesome. But one of the reasons I like that you brought it up is the truth is the truth is the truth at the end of the day. And I always think of a way of having a litmus test to everything. And the way that you would look at this, Morris, is how would you feel if you were the person on the opposite side? And how would you respond to that if that were you? Now, everybody wants you to get the best deal. That's what we're here for as agents and loan officers. We're already doing our best to deliver, maximize, provide you the service and the skill that goes along with the process, and make sure that you're getting the very best the whole way through. So when you're like, hey, you jump ship real quick, that's like awful. And it's the exact word that Sev said, because you're like, we're working our butt off, and in real estate and loans, I mean, the true top performers are going to be only commission only 100%. And if you're a top performing agent in the commission only world, or a top performing loan officer in the commission only world, the reason you're top performing because you're really doing good. and you're really very knowledgeable and you know the process inside and out. So when you screw somebody over like that, and it's just wrong as sin, and it just shouldn't happen. And I'd ask you and anybody else that thinks that way to ask yourself, how would you respond? And if you're okay with your decision, show up to work for free. If that's something that you want to work out with your employer, I'm sure they'd be happy with you.
Okay, and here's another thing too. I'm gonna do what if. Okay? What if you do this, okay, and you tell one lender to go pound dirt, and then the other lender can't fund you anymore, and you got to go back to the lender that you told to pound dirt that you had working for free. That's a humbling thing. So just bear in mind that karma it will come around, and that is a possibility. I have seen that happen. So just think about it.
It brings up a little country boy in me that says, hey, there's that saying that said, don't step on toes today, because the toes that you step on today may be the ones you got to kiss tomorrow.
Yeah.
Which means everything that you just said is that you should not step on toes. You should be kind to everybody and shoot straight. Always be honest and upfront. And that's part of the reason I'm going live right now, 9 a.m. Pacific, is so that everybody gets the right information. They see it from, like, you're in Colorado Springs. We got Bill's a loan officer. They're getting the different perspectives and having the opportunity to ask questions real time. Speaking of questions being asked real time, Drew's Enthused did let us know he's in Arizona, and the title and escrow company says they aren't allowed to deal with keys, which is true, and they had the seller in early because of COVID. So all great points, Drew. So I'm wondering if they're actually closing early and on your house, not Friday. Maybe they're closing tomorrow if you're getting the keys. We do get those situations in real estate where we end up closing early. At the end of the day, this is where it gets back to it being so important to what Sevin, both Sev and Bill have shared with us today. Great communication. Get up with your buyer agent. Ask them what's going on, and ask them when you're actually closing on the property. If you're getting the keys, do you legally own the property? Right? So please make sure that you get with them, because that's
make sure the contract backs it up. I know that a lot of brokers, when they're writing up the contract, when it comes to that occupancy date and that occupancy time, they do the date as scheduled, right? The closing date as scheduled for the possession time, the possession date. So if you haven't pushed out an amendment to reflect that you are closing early, technically you're not taking possession until stated in the contract. I know that a lot of agents will write it up differently, like day of closing, hour of closing, funding, delivery of deed. But bear in mind that you might want to just have your broker reference a contract, you reference a contract again, and make sure that even though they say you can be in there and you are closing early, you can still take occupancy of that property.
Exactly. All very good points. Drew sent in another message, says, thanks. I'll confirm with him today. You guys rock. Thank you, Drews. We're happy to be able to help you and anyone else that has questions today. Speaking of, Morris D hits another question out here. And yes, Morris asked this last week when we had real estate appraiser Kent Volmer on with us. So Morris is saying, I've asked this last time. I'm buying a house that has a assisted living facility in it. The house is zoned residential, but my lender is saying that I should apply as commercial. And we were digging into this last time with Morris about the difference between residential and commercial properties. Since Bill's with us today, what I'd like you to do, Bill, is hit that from your loan lending brain right there. Why, if it's a residential property, would a lender ask him to go commercial? Because zoning is zoning.
Zoning is zoning, but there's a business being run out of it. It's not a home where somebody's living per se as a primary residence. It's assisted living. It is different. We would not be able to lend on that. That is looked at as a commercial property. From my experience, at least here in Las Vegas, that is correct. Yeah. So it is.
Wouldn't you need to have it as commercial? And I'm not a lender, so I'm asking you. Wouldn't you need to have it as commercial so you could use that income to like offset the purchase price or the debt, or how does that work?
You would think so. I'm not a commercial lender. I don't do commercial loans. I've been doing residential for 14 years, so I really don't know the answer to that. Gotcha. But yeah, as far as the commercial side, commercial is really different. It's income based. It's not so much property income based. It's not so much based on the income from the individual buyer. So totally different world. I'm just not an expert in that by any means.
Cool.
So Morris, the suggestion here is going to end up getting back with your loan officer, following through with, I guess, what they're advising you to, and to what both Sev and Bill have shared today. If something doesn't sound right to you, then guess what? Call another loan officer and see what they have to say and see how they're going to approach the situation, compare notes at that point, and then make a decision that's well informed, that is right for you. So at the end of the day, this is where picking up the phone and making a few different calls absolutely makes sense, to make sure what you're doing is, number one, legal. Number two, that it's actually going to work out the way that you think it's going to work out. And number three, of course, to make sure that you're taking care of Morris. And thank you again for following up with the same question from last Friday, where we had an appraiser give his take on it. And now we have a rockstar agent out of Colorado Springs and Bill Merren here with New American Funding hitting it up. So my suggestion is get with the agent or get with another loan officer. Yes, ma'am.
Yeah. And keep in mind that you're working with sales professionals, right? Like your real estate broker, your loan officer, they are sales professionals. And one thing that sales professionals are usually really good at is selling you all of the stars in the sky. Some of them are a lot more self-motivated than others. So if you do compare and contrast this different information with different loan officers, different brokers, whatever your situation might be, and you say, hey, my LO said this, what do you think about that? What do you have available here? That other LO is going to tell you everywhere that other lender's program sucks for you, and vice versa. And they're really going to help you weigh out all of the pros and all of the cons for every option that you have. So call around. Absolutely.
So I like the way that you hit that up, and I like everything that you shared. I think it's right, and that's one of the things that, you know, what has grown the community, and as the community on my YouTube channel continues to grow, people can always expect the truth, no matter what. There is straight up truth and objective truth of that coming out, and that's why I love having so many different perspectives and experiences on the show, because at the end of the day, there are going to be sales professionals that are like, oh, they're typical sales professional that's in it for them, and that's about all they think about. But then the top-notch professionals, I've noticed a common theme across the country and in real estate practice, and even here locally in Las Vegas, a top performing professional is not concerned about the commission. They are concerned about the person and making sure that person is well educated. Right. They're well educated. They know what they're doing, and that they are comfortable and confident with their decision all the way through the process. And that's why I started this YouTube channel 4 years ago. And that's why I've cranked out those over 600 videos, trying to get as much accurate information out there as possible. And look, we can do good things together. We're always stronger and better together than we are not. So Sev, by virtue of you coming on today, I mean, people now that are in Colorado Springs area, they know they can turn to you. They've had the opportunity to listen to you, and they see your integrity and they see your honesty, which is freaking amazing, right? Bill Merren's been on, you know, twice a week. Today, I was a little bit nervous this morning. I thought he wasn't going to be here, but then, you know, I don't care what you're wearing, Bill, as long as you come back. We just need you. But that said, you know, a top-notch professional is always concerned about the person. It's people before profit. Every day of the week, with every top agent I've ever met, including the way I practice here, people first over profit.
Yeah. And I always say to my clients, because there are instances where transactions get tricky, right? And this is why you need to be working with professionals. And sometimes to save the deal, I'll throw my commission at it to just keep it together, right? And my clients are like, oh my gosh, I can't believe that you did that. Like, why would you do that? Yada, yada, yada. Well, because at the end of the day, this is your house. This is the one, right? I think that every real estate broker, when we're showing properties to our clients, we can tell when they found the house, right?
Yeah.
And I always tell my clients, it's not my job to get paid. It's my job to get you to the closing table, right? Obviously, I work so I can make money and keep a roof over my head and buy, you know, expensive hand sanitizer. So it is my job to get you to the closing table. So you want to be working with somebody that is equally motivated as you. If you are working with somebody that is not equally motivated as you, you need to keep shopping.
And that's why I've always suggested in the videos I've made, when it comes down to finding both loan officers and real estate professionals, we got this really fun friend called Google. And if you Google an agent, It's very easy, really quick to isolate down a top performing agent, because top performing agents, guess what? They don't stay hidden. They're not hidden at all. They're easily found by simply Googling their name and then maybe the location, a real estate agent or a loan professional. You'll come up with those reviews. You can actually read what real people, just like you said, working with that professional. You can see their star rating. In the case of agents like Seb that goes live on our Facebook a lot, and agents like myself that do YouTube a lot and just now kind of starting to tamper with Facebook a little bit. Hey, you know what? You can hear, you can see, and you can identify whether that's the kind of professional that you want working with you or not. And I think it's really important that, people will Google, hey, where can I get the cheapest hand sanitizer, to Sev's point a moment ago, right? Without counting the cost. Well, at the same time, real estate is like the biggest purchase most of us ever make. And people don't Google the agent. It's almost like, it's just, to me, it's like, my mind is blown every time I talk to somebody. Hey, did you Google me? Did you Google them? Did you at least compare and do your homework, right? Because you're dealing with hundreds of thousands of dollars, millions of dollars in some cases. It's a lot of money. And we want to make sure that you get it right. And I do want to reiterate that again. Google to make sure you get the right one for you. So,
and sometimes it is super beneficial to work with a top producing agent, but sometimes those top producing agents have so much volume in front of them. They have so many clients in front of them. If you are someone that's going to need a lot more time and attention, you might want to try to find the new guy who has a really close working relationship with a top performing agent that has been doing it for 20 years, that they can reach at 10 o'clock at night. Because I can tell you that top producing agent, they don't need to answer your phone call at 10 o'clock at night, but the new guy is going to be super eager to do it. When he calls his top producing agent that he works underneath, that agent has an obligation to maintain a high level of supervision in helping this new broker. So it's a great way to get top-notch service and availability with someone that is hungry and motivated and willing to work on your behalf, that's always available for you, and that 20 plus years of experience from a top producing broker. So just shop around, think outside the box on a lot of these things, and figure out what you need to be successful and feel confident going into your transaction.
Good points. So we have Gotyor is asking another brilliant question. Gotyor, thank you again and welcome back to the live stream. I really appreciate you being in here and your awesome questions. So Gotyor says, also, if you run 2 credit checks, if your credit score is at 680 and you run another credit check, it will lower your score by about 6 points. All of a sudden, the loan program you were looking at, you may not be eligible for any longer. Thoughts on that one?
No, man, that's it happens a lot. I just had this happen last week with a guy. We had him ready to go. He was approved. Literally, we were ready to reserve his funds for one of those down payment assistance programs. He wanted to shop me. So by all means, man, he went and shot me, ran his credit. Something between then and now, it popped up on his credit. His score dropped 6 points. I don't think it was not because of the inquiry, but just something popped up on his credit. Score dropped, came back to me, said, hey, man, this guy can't do it. I want to come back and work with you. And I had to tell him, I'm like, sorry, buddy, the program's gone. The money's gone. We can't reserve the funds. I'm sorry. So it's just one of those things to where, again, kind of hitting back to our other point, you can absolutely shop your lender at any time. You want to look out there and see what other options are. Make sure your lender isn't way off, especially if you get a bad vibe from that situation. But also understand that if you choose to do that, things like that can happen as well. So get your awesome point, man. That can happen. Doesn't usually. It's very rare, but it definitely can.
Since you have 2 lenders pull your credit, see if they can help you figure out how to get it back up. You got 2 professionals that are capable of giving you good advice.
Awesome. Love it. Thanks, Sev. So Ketna says, Andrew, can I buy a house with a 559 score as a first-time home buyer? Now, I want to isolate something before Bill jumps on this because I know he's getting ready to do just that. So with a first-time home buyer, I'd like to let you know the technical definition of a first-time home buyer is somebody that has not owned real estate in the preceding, like the previous 3 years. So if you haven't owned any real estate in the most recent 3 years, you're technically defined as a first-time home buyer and would qualify for what are considered first-time homebuyer programs, which the term in and of itself, in my opinion, is just a sexy marketing tool for down payment assistance, home as possible, to get your foot in the door and that fun stuff. But to Ketina's point, or Ketna's point, 559 credit score, first-time buyer, go.
So no, that's actually not available currently right now. A few weeks ago, it was. Technically, you could buy a home with an FHA loan with 10% down below a 580 credit score down to a 500. Not very common. There's a lot of other factors that kind of come into play to get qualified for that. Again, recently, most lenders did really tighten up their lending guidelines to where they have minimum credit score requirements. I heard of a couple lenders out there that might go down to as low as a 600. We can go down to as low as a 620, and I know we can close that deal. You're at a 559, so to really look at your credit and see what the issue is, because you might have an opportunity to get those scores up. You might have some simple tweaks and things that we can do that it might only take a couple of weeks. If you're able to get that score up. Again, that's going to be a good chunk of points you got to make up, but I would definitely have a loan officer run your credit, take a look at it, see what it is that's going on with the credit, and see what we can do to get those scores up. Because as of right now, with the 559 credit score, I don't know anybody that's got any first-time buyer programs available at all.
See, and one question that I have on behalf of a borrower right now, I know that there's a lot of confusion as to why these programs are going away. Could you break that down from a lending standpoint with some correlation to what's happening in our markets with COVID?
Yeah, so all the lenders, the guidelines have tightened up because there's a lot of risk, and there's a lot of lenders that are nervous about buyers being able to make their payments, about being able to fund the loans. The money that these pools are going into with the mortgage-backed securities being purchased on a weekly basis has slowed down a little bit in the last week. But as of right now, lenders just are not lowering those guidelines because it is a riskier situation on the secondary market, not being able to have buyers for those mortgages. So it is an evolving situation. It's something that's changing on a daily, weekly basis to where it could be next week. This could come back. I think it's going to be a few months before it does. But as of right now, it's just not.
So I'm glad that you brought that up because it hits two things on the head. And the reason being that I wanted to have this as a main topic today. Number one, you mentioned a moment ago, Sev, well, some of the programs are going away, but yet not all the programs have gone away. And that's where the misinformation exists about first-time home buyer programs, down payment assistance. It didn't sound like to me, and please correct me if I'm mistaken, either of you. That's why we like all this perspective, right? It doesn't sound like to me it actually went away at all. It just sounds like to me lending guidelines got tightened, which may have pushed out a market segment. The program still exists, but now the credit score requirements are a bit higher. Debt to income ratio factors may have been adjusted based upon the risk assessment of a creditor called a loan officer, right? Yeah. Correct me if I'm mistaken on that. It's still available, just tighter guidelines.
Yeah, for the most part, that's true, Andrew. I mean, there is some programs that they have frozen. They're not funding any deals at all right now. Are they gone forever? We don't think so. We think they'll probably come back, but there is several that have just frozen funding any loans altogether. So you are right. The programs have not went away by any means. Most of the case guidelines have just gotten a little bit tighter. But yeah, you are correct.
And a lot of these first-time homebuyer programs, I think probably most of them, and correct me if I'm wrong, they only require you to have a minimum of $1,000 of your own money wrapped up in the transaction, right? So in theory, it only costs you $1,000 hard money cash out of your own pocket to purchase a house, which is a really beautiful thing. Because think about when you go to lease a place, right? You've got like first and last month's rent. I know that here in Colorado Springs, rent's about $1,800. So that times two. It's actually cheaper to buy a house in a lot of these instances than it is to rent something.
Great point. Great point. And that memory guy meme says funded can be before closing day, question mark. Yes, absolutely can be before closing day. Correct me if I'm mistaken. I see you making a grimace, but I've seen this happen in practice.
Yes and no. So yeah, it can. The lender has to make an exception to that. Sometimes
Right.
lender may not want to because they're releasing their funds before it's recorded into your name. Sometimes it can happen. We don't like to do that. We prefer not to do that.
It can happen if
Yeah.
it needs to happen with an exemption from the lender or provision from the lender. But
Correct.
more often than not, what happens is you fund the same day you close, record, get the key.
Yep.
Perfect.
Typically, we
Seb?
wouldn't fund that deal unless we knew we were recording that day. There is instances to where it can't happen because maybe it's late, maybe there's a cutoff, maybe COVID has got things crazy and the county recorder is going to take a day or two to do that. Then just communicate. I would say don't assume that that's going to happen. Just communicate with your lender and see if that's an option.
I think it's
one thing that's really. Go ahead, Andrew.
No, I was just saying I think it was a great question. So,
Yeah.
And I was just thanking them for the great question.
Yeah, absolutely. Absolutely. I think it's important too right now to keep in mind that as up in the air as things are with COVID, we have had a good opportunity to get a gauge on how we're going to work around it, right? So it's not necessarily this totally new thing to us anymore. We have a lot of systems set up and in place to where things can continue to run smoothly and on schedule and as planned. So while it's important to maintain some flexibility right now, we have a good amount of it handled and figured out with systems set up and implemented to make sure that the ball's rolling.
Absolutely. Virtual showing, virtual tours, Facebook videos, all kinds of different methods there. So very good points. Thank you, Seb, for sharing that. Rafael Flores said, closed on my home an agreement to receive keys on 4/13. Seller still occupying the home, having trouble finding replacement for themselves. What are my options as a new owner of an occupied program, or excuse me, occupied property?
So this is complicated because,
Yeah.
I mean, right now, I know that in Colorado, we cannot do evictions right now because of COVID not happening. So typically, in this scenario, you could evict your sellers, right? Because you're doing that post-closing occupancy agreement where you're renting it back to the sellers. So typically, you could evict them. But right now, that's not necessarily an option. So in contracts here in Colorado, we have a daily charge, a penalty that we're going to go ahead and charge the seller if they fail to deliver possession on the property to us by the agreed upon date. And so whatever you put into the contract, whether it's $100 a day, $200 a day, that would be your means to fix this if they're not getting out, because you're likely not going to be able to evict them.
So it's a great point, and that's exactly what those provision and purchase agreements are all about. It is a buyer's remedy that if the seller is not out by the date they're supposed to be out, then every single day they're in that property, to what Seb just said, is very customary, $100 to $200 a day, depending on the price of the property. It could actually be much, much more. At the same time, it's more customary, $100 to $200 a day for every day they're not out, and they have to pay that. So they have a high incentive to get out, even if they can't be forcibly evicted, given the COVID situation, which, to your point, saying what's going on in Colorado is also the same here in Las Vegas, where people can't be forcibly evicted at this time. So,
yeah, and one thing that's important to keep in mind in this particular situation, I deal with a lot of tenants, a lot of transferring leases. You don't want to piss your tenant off, even if they are your seller, right? So, I mean, you want to get them out. You want them to feel some pressure and feel some heat to get out on the agreed upon date, but you don't want to piss them off because you, landlord, own that house now. And I have seen plenty of tenants, through closing occupancy agreements or just your standard tenant, get angry and trash the property or leave it in less than satisfactory condition, and you are there stuck picking up the pieces. And this is hard because unlike a typical leasing situation, you don't have inspection pictures, really. I mean, maybe from your inspection, but it's not going to cover the entire property of you know, before and after and everything else. So be careful.
Yeah. So I think those are great points, and that's like a video and a conversation just onto itself about negotiation strategy, documentation, the way that you protect somebody in certain cases. If it looks a certain situation, throwing in a post-close agreement real quick before you get closed on that program, get it legally binding and make things happen, and provide remedies in the case that a seller would that became a tenant decided to thrash the property. Then they also know they're on the hook by the way that you would insert new document or new agreed upon terms into a contract via an addendum. So like I said, that's something that once you go into that rabbit hole on negotiation strategy, protecting clients, boy, oh boy, we could be here all day.
Yeah.
There's a lot of maneuvering in contracts at the end of the day, and it's really important to get up with your agent. You said you get the keys on 413. Get with your buyer agent, start having some of these conversations with them right here, right now, today, about your best ways to protect yourself. Sev highlights a very, very important aspect about what happens if they don't get out. They can't be forcibly evicted due to COVID, but then they destroy the property because for some reason, Raphael, I mean, you seem like a really wonderful guy and all, and I'm sure that you are, but let's say that you ticked them off, right? God forbid. And they decide to get stupid with the property that's your new home. So we want to see you.
Yeah,
we want to see you
absolutely. Make
protected.
sure you've got a copy of some proof
Absolutely.
of insurance would be good.
Renter's insurance.
Maintaining some insurance.
Yep. And whenever I do these post-close agreements, everything that you're saying is already built into the post-occupancy agreement and a seller leaseback situation, specifying exactly when it kicks off, how much it is, having that money put in the escrow right up front, due back to the seller from the seller's net proceeds, having that money withheld in an escrow account with a pay term in 30 days arrears, plus everything to do with they're expected to have renter's insurance. And I mean, like I said, this really can go deep real quick. So when it comes to contracts, yes, contracts, it sounds like for you too, you're a master of them and you know how to help people and protect people. So that's awesome. So Raphael, all the same, there's a lot of things your agent could be doing for you. Have that conversation with them right away, please. Roxanne Solis, I think you made a new fan with Roxanne Solis. Roxanne says, that's me. I'm the new guy talking about when you were talking about the different types of agents and stuff like that. So Roxanne, be sure that you subscribe to her information, please, in the show more description. Hit her up on Facebook, see what she's doing, follow her, and, you know, make things happen and get to know more about real estate so you can be a top performer too.
And Roxanne, one thing that I'd like to say just real quick, I started at 19. Hi, I just graduated high school. I've never done this before. Trust me, with the largest transaction of your life. That was a hard pitch. I mean, really hard. So I would love to chat with you and tell you some of the things that I did to help myself earn business. And you could apply it to yours as well. So feel free to reach out to me.
Hey, that's awesome. And thank you for that support and great points. Morris comes back, says the appraisal was ordered a week ago, but the appraiser did not show up yet. Can a seller's broker call the appraiser to come as soon as he or she can?
So that's a really good question. We had that come up a lot in the last couple of weeks because the appraisers are so backlogged. Morris, on that one, what you're going to want to do is you're going to want to have the lender reach out to the lender, because the lender more than likely used an AMC, an appraisal management company, to order that appraisal. And the AMC is kind of the go-between. They're the middleman between the lender and the appraiser. So I would have the lender contact the AMC and ask the appraiser to reach out to whatever agent you want them to reach out to contact them. Will they? More than likely, yes. But you're not going to be able to just have the appraiser call them. I would have the AMC request that they reach out to the appraiser and then go that route. That's typically how we've had better success with that. But just understanding in these times right now is just having a little bit of patience with the appraisers, because they are very backlogged. There's some appraisers, depending on where you're at, I'm not sure what your guidelines are locally there, but drive-by appraisals right now are very, very popular for purchase transactions. So if they haven't actually been in your home, that doesn't mean they haven't done the appraisal yet. So they could have driven by, they might already be working on it. But regarding that, regarding that, sorry, the appraiser is they're backed up. They're very, very busy. but I would just increase that communication with your loan officer, because they're the ones who can be that go-between between the AMC and the appraiser.
Also, pay attention to your dates and deadlines in the contract. I know that here in Colorado, we have that appraisal deadline. So if you're still about a week out from that deadline, well, the appraiser is probably going to call you in the next couple days to get out there and then have a couple days to get it in for that deadline, right? Depending on the financing type, you don't have those deadlines. So they're going to just get to you when they get to you. So look at your dates and deadlines, and that might give you some clarification there as well.
I think that's a great point, and it's the same as true of all purchase agreements that I've had the pleasure of people sending to me so I can see them. Every one of them will have a base set of contingency guidelines, time dates, and appraisals are always one of them if it's a financeable offer. So great points. Thank you for that. Eric Cawthorn. Well, Mr. Eric, I am super glad, my friend, that you were able to catch us on some of your downtime, maybe in Reno. Eric, for reference, everyone, I helped his brother and his sister-in-law buy their house, and Eric is getting ready. Thank you for your service, by the way, to PCS to Las Vegas when the time comes due. And he's asking an amazing question that I think a lot of people, not military only, but including military, obviously, have on their mind's eye right now. So, Eric, thank you for being here, and thank you for the question. Eric says, in your opinions, would it be better to sell your current home and gain $100,000 in cash to use for a down payment and home improvements, or rent out the property, although I would be living in a different city using a VA home loan, by the way? Great question. Thoughts?
Well, it depends on the property. Can you make enough money in rent to where it's paying for itself? After you hire a property management company, because I could tell you, if you're out of state, you probably don't want to be your own property manager. It's you get phone calls at like 4:00 in the morning for stupid stuff all the time, and I would rather pay someone else to do that and check in on the property and make sure everything's handled. So you want to look at the numbers and think about that, and you also want to look at what the numbers have been doing in your market for the past however many years. To see what the property is on average appreciating like. One thing that I can tell you is every super wealthy person that I have met that has built their wealth through real estate, they keep their properties. And they get as many of them as they can. And then I know one guy, over the span of his life, this dude bought 60 properties.
Oh, wow.
And I know, right? And he sold 15 of them as he got into his older years. Then with the proceeds of those 15 that he sold, he paid off the remainder of his properties. So he owned them outright. And then he went to the tenants and said, hey, do you want to buy this property? If so, you need to do seller financing. So he's the lender on that property making money. He's literally making money 5 times over. It is absolutely insane. And you do have an appreciating asset when you have interest in real estate. So you can actually take that equity and you can leverage it to purchase other properties without having to tap into your VA. So you can keep that freed up and available. So I personally, if I were you, I would keep it if the numbers make sense and I'm not paying to keep that property rented out every month. One thing that you can do is you can Google a cap rate calculator. Sometimes this is helpful for those investors. And you just fill out the information on that cap rate calculator. And if it's looking good, typically my investors want to see 6% or less. Means it's a solid investment. Like, keep it. If it's looking good to you, then keep it.
It's a great point, and I'm glad that you shared that. And for anyone wondering about real estate investing, yes, there's an entire channel, entire playlist channel dedicated to that, breaking it down from how to treat it as a business, because it is one, how to specify breakdown cap rates, and a lot of other different considerations, along with going through a cap rate line by line that really dive deep. So it's there, and I'm glad that you mentioned cap rate, because it's something that doesn't always come up so often when considering these options. So Eric, in short, my friend, It's really going to be a judgment call. If you want to keep it and you want to build long-term wealth, to what Sev was sharing with us a moment ago, please note that what she did share about the gentleman that bought 60 properties, she did say it was over his lifetime. It wasn't overnight. So it's just like anything else. True success takes time. It takes hustle. It takes hard work. It's smart decision making. So be patient. But Eric, if you wanted to forecast where you want to be 20 years into the future, it's an option as long as you're still able to purchase the home here. I know Bill wants to jump on this and probably tell us about how much rental the income can be counted towards the offset the mortgage, right, Bill?
Yeah, that's a good point, Andrew, with that, because the rental income can be used to offset your mortgage liabilities when it goes to purchasing again. But Eric, something to consider, I know that Seb had a lot of great points on that, but when it comes to you purchasing your home down here, I believe in the Clark County area when you PCS, is the current loan you currently have up there, is that a VA loan? If it is a VA loan, and you do decide to go with that awesome advice to keep that property, build your wealth, right, and do that, you're going to need to, if you want to use your VA loan down here, more than likely, you're going to want to refinance that VA loan out of that VA loan to a conventional loan to free up that VA eligibility, so you can use your VA loan down here to buy your new primary home. So that's just one thing I would recommend, because if you do want to keep it, great option, awesome stuff. Building that.
What is the max on VA?
The what?
What's the max on VA?
The max loan amount?
Go for it, Bill. I know you're jumping on that one.
The max loan amount on VA. So typically it's been 500 conforming loan limit, which is 510, 400 right now currently. But VA does allow you now to just whatever you qualify for, you can go up to whatever you qualify for. So pretty cool. Does put you in a different bucket as far as interest rates and things like that go, because it still is, it's considered a VA high balance. So you're not going to get the rates you would if you were in the normal conforming loan limit. But yeah, you can actually close on $1 million home with 0 down payment, which is freaking awesome.
Wow.
Yeah.
And
So,
what's even better about that, what your big lending change was to the VA loan, Bill, and I know you were super excited to jump on this because we've had a conversation about it, I think, in November, where we were talking about this really big change that you don't even have to put up 25% of the difference between the non-conforming amount to the conforming amount that you used to. Now the VA jumbo market is 0 down. You just got to be able to qualify. Multi-million-dollar property could be yours, 0 down. You just got to be able to qualify for it. And I thought that was like, what?
Yeah.
That's like insane. And it's a massive change. So I'm glad that it came up. And Seb, that's a beautiful question. So thanks.
Yeah. And you know, the coolest thing about that too, guys, because there's so many things, and that's one thing that I'm freaking passionate about, Andrew. You know, that is just helping the veteran community, helping veterans. But that with that comes the VA funding fee, right? If a veteran does not have a 10% disability rating or higher, they've got a funding fee on that VA loan, $1 million loan. That's a big chunk of money that's being financed into that loan, but it's awesome. It gets rolled into the loan, and that actually goes towards helping other veterans. So I think it's a win-win. I love it. I just love helping veterans and giving back. Kind of a shout out, Andrew, to my hat here, since I'm rocking a hat. That's the Chris Kyle Foundation. They give back to veterans and first responders actually as well. So definitely something I'm passionate about. Seb, thanks for bringing that up. That's a good point.
Yeah.
Love that. Well,
and as Eric knows,
important too is when you're thinking about selling your house, a lot of my clients who did purchase VA, and they do have a VA loan on the property, and there is a funding fee. It's easy to forget about that funding fee, right? You definitely want to be working that into your calculations so you know what you're going to be walking away with if you do elect to sell. Because that funding fee, it does have to be paid back most of the time, unless there is some special exception for you where, you know, yours doesn't. But work it into your numbers because it's there.
Yep.
So, Bill, I know that you have a call that you're probably a few minutes late for, but I do want to say super thank you so much for jumping on. I was a little concerned initially. I was like, okay, Sevin, I got this. We're going to make it happen. And I saw it pop up. Bam! That's how we do. On any given live stream day, anything can happen, right? So,
with
thank
kids,
you for
man,
that, Bill.
4 kids, it's crazy.
And I appreciate your time. So, Sevin, I'll hit a couple more of these questions here, and we'll go at it if you have some time, Sev.
Thank you, guys. Thank you, Sev. Great meeting you.
Thank you. It was good to meet you.
Thanks, guys.
Okay,
Oh, that was
so
fun. We're still
let,
going though. I'm excited.
let's keep going. Let's keep going. I could live stream all day as if people are here and they want to ask great questions. I'll keep going at it every
I'm
day of the
right
week.
there with you.
So here we go. Next question. Pocho Perez says we are closed on April 21st in Florida. My question is, with COVID-19 in the mix, how are you doing the closings? I think that's a beautiful question. And we were having a bit of this conversation before we went live. Would
Yeah.
you like to go ahead and take it?
Yeah. So, I mean, I'm seeing a lot of different things. We're seeing mobile notaries going to your house,
Mhm.
where, they can watch you sign through the window and then you can hand the papers back. We're seeing drive-through closings where essentially you pull up to the title company's parking lot and you sign your documents and they take them inside. We're seeing closings where you still go into the title company, but parties are all closing separately. Your agent
Mhm.
is not likely to be there. What I would do if I were you, I would reach out to your title company and see what they are doing right now as far as closing goes. Because they're going to obviously have the best answer for you as to how that is going to work. And they'll be able to give you really solid instructions as to what you need to do, where you need to be, what you need to bring to closing on the 21st.
I think that's a great point. And one other thing that I found out about earlier this week when I was signing with a seller client of mine getting ready to close is uh, the escrow officer said, "Hey, Andrew, yesterday, guess what happened?" I said, "What's that?" And she said, "We just did our very first virtual mobile notary signing."
No, that's
Therefore,
wild.
in addition to all the options you just said, it is also possible. And I said, how'd you guys orchestrate that? She said, we were on Zoom. The notary was on one side watching the client, validating all the information on the screen. They had sent the email with all like the driver's license and all that fun stuff so they could have all of validation technique done. And they were doing everything virtually in real time, kind of like we're streaming live right now. So Pocho, there's all those wonderful options Seth provided, plus more.
I love it. I love it. And we were talking
Isn't
about
that
this
amazing?
earlier. Like, it is so
Yeah.
cool to see all of this happening because truly we are revolutionizing real estate right now. I mean, the industry is rapidly changing, and a lot of things that caused hiccups before in the past just because you can't be there physically, that's probably not going to be an issue here in the very, very near future, because we are implementing so much new tech. So really, that is a fun thing. I'm happy you shared that.
Absolutely. So you might want to talk to some of your escrow people in Colorado now and say, hey, when are we going to start doing virtual?
Yeah. When can I get some of that? Yeah, I like it.
Fantastic. So Aflo says, hi, just moved in with my in-laws and renting a house in Southern California. Any advice with approaching the homeowner to buy the house? In-laws have lived in the house for many years and currently is a fixer-upper. So a lot of things come to my mind's eye. Do any come to yours?
Just moved it. Well, one more time. Can you read it one more time?
Sure. Aflo is asking or just letting us know, just moved in with my in-laws and renting a house in Southern California. Any advice with approaching the homeowner to buy the house? The in-laws have lived in the house for many years and is currently a fixer-upper type home.
I would I would just ask. I mean, I don't know where you're at on that.
Just ask.
Yeah.
Exactly right. But before you ask Aflo, what I would suggest is make sure that you can qualify, know what the reasonable valuation of that property is, relevant to the condition of the property, get a loan pre-approval letter. So when you ask, you're essentially going to try to do a private party transfer in that situation. You could hire an agent if you wanted to help orchestrate the documents, or you could hire a real estate attorney if you wanted to protect all measures. So a lot of ways to cut that one. But at the end of the day, be approved, ask a question.
Have your numbers put together, right? So you can go to the seller and you can say, hey, I'd love to buy your property. I
Mhm.
qualify to purchase your property. Here is my letter of approval with a local lender. The property is realistically worth about X on today's market. I got a broker price opinion. Here you go. I know that standard, quote unquote, standard commission that we usually see in this area is about X percentage. So on this purchase price, that's going to be $15,000, $20,000, whatever it might be of commissions. But if we go ahead and we just use an agent to help us do the paperwork and walk us through the transaction, and we share an agent, I know that commission's only going to be X. That's what this agent told me they would charge. Maybe it's even a flat rate. So since I am saving you X amount of dollars on the property, you want to have your pitch together, right? Like you want to have all your ducks in a row before you go to the seller asking them if you can buy their property. You want to make it sound really, really good for them to sell the property to you instead of putting it on the market and getting true market value. Usually when these off-market deals happen, the seller usually takes a little bit less. The buyer's usually going to go ahead and get the property for a little bit less just because of this commission. So you want to make sure that you have all of your information, all of your numbers ready to present to the seller. That way you can close them on selling to you instead of on the public market.
You got to give them the incentive, because going on the open market, they realistically could probably get a lot more if they hire the right agent to get the property sold and still net more even after the commissions are included.
Right.
That's the reality. So if you're going to come in hard, like she said, have your ducks in a row and ready to go, and make it look sexy, make it look appealing, and get the seller to say, hey, you know what? I don't want any of the drama. You just made it easy for me. And you know what? I was just thinking about that. So glad. Boom, bingo on the nose, right? Bingo. So I love it. So Ketna says, thank you for answering my question, guys. I guess I will have to keep working on my credit, getting it higher. Yes, Ketna, as we were talking about earlier with your 559 credit score, please get with the loan officer if you haven't already, and have a conversation with them about how to do it. Bill mentioned that depending on what's going on with your credit, it could be a situation of saying, hey, these are some really quick corrections that can be made here, and you can bounce up your credit score in about 2 to 4 weeks, depending on what's on your credit report. One of the best things to do, it sounds counterintuitive sometimes, but if you really want to know what's going on with your credit, approach a mortgage lender, because they will tell you exactly what's going on once they run your credit and tell you exactly what you need to do to get your score up, which then gives you a game plan moving forward with knowing, hey, I'm going to be able to buy in 3 months, 6 months, 9 months, 12 months, 24 months, 5 years, whatever the situation may be, you'll have an answer.
And you've got a team member there too, that's going to help hold you accountable. It's very likely that loan officer is going to call you back and say, hey, did you pay this down a little bit? Did you pay this down a little bit? Are you doing what you need to do to purchase property, right? Working with someone that is just as motivated as you. It's a very important thing. And I've heard all sorts of crazy stuff, like 2 brothers, right? And the one brother has stuff from the other brother reporting on his credit. And that happens all the time with people you don't even know. You don't even have to be related. It happens a lot where you have things reporting on your credit that are not even yours, where people are paying down debt that is actually good debt. You want that debt because it shows a long credit history. Your lender is going to be able to walk you through all these things. I've seen people pay off debt and it actually hurts their credit because they're paying off the good debt, not the bad debt. So talk to a lender. They're going to be able to tell you all of the do's and all of the don'ts. Maybe get you a secured credit card that's going to help up your credit. And that essentially is you just borrowing your own money. There are so many different things that they can guide you to do. So talk to a lender for sure. It's worth it.
Yeah, absolutely. And I'm glad that you mentioned everything, because when you're starting to talk about good debt, bad debt, what is that exactly? I have a lot of videos on my channel about that too. Again, there's over 600, just letting you know. Yeah, we go deep onto that channel and it's all there, but everything she said is absolutely true. You want to have the right kind of debt and you don't want the bad stuff. So there is a difference. But if you want to go into detail on that, just look it up on the channel and you'll find me very much nerding out on that topic. So Gotyer says, and this is why people need agents, for these reasons. Exactly right, Gotyer. And thank you for your support. It's a true statement.
Yeah.
Agents do so much more than people think they do. People like, oh, I don't know what an agent does to get paid a lot of money. In reality, most agents only close maybe 3 to 4 homes a year. And that's actually very tough to live on. And there's 1.8 million real estate agents, according to the National Association of Realtors. So when you look at the need for agents, yes, and you need an agent that either is extremely eager to learn, that's newer, like Sev said earlier,
That
or
has
you need
help available.
that has help available. That was the next point, through a top agent that knows the ins and outs and how to help and what to watch out for. So those are really good points, because there are a lot of different reasons people come into real estate. And there's a lot, just like anybody else in any other profession, you're going to have those top performing people that really care, that go the extra mile to get things done and help people. And you're going to have those people that are just there as a 9-to-5 type position, which in my experience, 9-to-5 thought process and real estate agent will not last long. They're out of business. They're out of business before they even stepped a foot in the door, and they just didn't know it yet. But at the same time, that's sometimes why agents in the industry can get a bad rap, is because of that high turnover rate, because the attrition rate in the first year alone in real estate, something like 87% will flunk out in that first year, right out of the gate. So not my stat, National Association of Realtors stat. That said, Sam S said no max. Going back to when Bill was talking about the VA jumbo, essentially no max. That is my understanding, Sam. I mean, Bill would be able to tell us if there's, I mean, maybe $1 billion, but I don't even know of a house that's worth $1 billion. I saw one the other day. I think Ryan Serhant is putting up a house he was marketing. It was like $300 million. I thought, oh my God, $300 million. What? Didn't
I
even
don't
know
even know
that.
if I'd want a house like that. That's just it sounds.
That's a lot of money.
Yeah.
300 million. I'm like, how do you get a
Yeah.
$300 million house unless you got 3 million acres with all kinds of water rights, mineral
Are
rights,
you
and everything
buying a
else
country
associated with
or
it?
what?
Yes, I bought the state of Colorado. No.
Yeah.
But it's in short, Sam, the way it would work is, from my understanding, there is no max on that. That's something that if you wanted to hit Bill direct on, then his contact information is in the description below on both Facebook and YouTube. Feel free to give him a jingle. But then next point, you did give us a number, so thank you for that. Sam is saying that I have a $650,000 zero down with a 3% interest rate and 3.006 APR. Wow, smoking low. Congratulations for you, my friend. That is amazing. So Eric says, thanks, guys. Oh, and Sam, oh my God, this just got more amazing. Going back in turn right here. Sam is letting us know that his VA loan was without the funding fee. It's super amazing. Zero down, no funding fee. Whew, you crushed it, dude. You crushed it. Good on you.
I'm jealous. Yeah.
Well, I have that. You know, I have my VA loan available as a former Marine and Bill's former Army. So we both have VA home loans on our own house. So when it comes to VA loans, he and I we do a lot of VA home loans, a lot of active duty and retired military and stuff. So yeah, VA loans are Rolls Royce to home loans, are like the way I like to call them.
Yeah, they really are.
And so you're not too old. So I mean, you're very young yet. So if you want to go ahead and jump into the Marine Corps or something, go ahead. 4 years later, you can have a VA home loan.
I don't think I'm tough enough to do that.
Don't sell yourself short.
To be honest, I mean, unless there's some type of something that I don't have to go through all the training for. I'm not built for it. I'm just not. The training
so no
in hot summer heat. I like a bed at night with my pillow, and I'm like 100 pounds, so if I actually had to go fight or do something, it wouldn't be very good.
So let's keep educating your brain so you can do what you're best at and making helping people make sense of real estate and be successful. So we'll keep on that one. So but the VA home loan definitely very much earned to all the reasons that you just shared. Very much earned. Roxanne says, thank you. Lots of great information shared here. Absolutely. And please remember, Roxanne, Seb did say, hey, feel free to hit her up. She's happy to share with you. Phyllis Bell Sutton says, any information on DPAs being DPAs for down payment assistance? Phyllis, we were chatting earlier in the live stream about down payment assistance programs, how that was working, along with identifying just how many first-time homebuyer loans are there, about guideline changes and such. So after the live stream, you may just want to go back to the very first part of the video, and the first about, I want to say 10 to 15 minutes of the video, we were hitting a lot of the information right on the head, and then a lot of Q&A since then. So that's
One thing
awesome.
that I would like to talk about real quick with down payment assistance. Most all these programs, they require you to have a minimum of $1,000 wrapped up in the transaction.
Right.
But you are still, and then you have the down payment assistance program for your down payment. But you still have to get your closing costs covered, right? So you either need to bring that money to the table cash. It's usually like $5,000 to $6,000 on like a $250,000 purchase, somewhere in that ballpark of closing costs that you're going to need. And it all just depends on when you're closing, who you're closing with, if there's an HOA. I mean, there's so many factors involved in it. But a great way to get that covered is upping the purchase price by the amount that you'll need and seller concessions to cover your closing costs. So you are only bringing $1,000 of your own money to the transaction. Now, one thing that you need to be careful with using these down payment assistance programs, they have different guidelines. Okay. So for example, I'm going to use CHAC and CHAFA right now. CHAFA, right? When you submit your offer, right, in the purchase chart, if you will, you'll have your earnest money amount in there and yada yada yada, right? So CHAFA, if you put your earnest money in at $2,500, it's a $250,000 house. It's usually asked for in about 1% of the purchase price. So you put $2,500 down for your earnest money. Well, with CHAFA, you can get the other $1,500 back, right? Because you only have to have $1,000. But if you do CHAC, you're not going to get that $1,500 back. It's staying in the transaction with CHAC. So even if you did get the seller concessions to cover those closing costs and everything else, bear in mind that you're not going to get that back with CHAC. These are important things to know as you weigh out the pros and cons between the different financing options that you have available to you. So talk to your lenders, shop around, ask all of these questions, compare and contrast. And when you submit that offer for, CHAC, if you only wanted to have $1,000 wrapped up in it of your own money, only put $1,000 down for your earnest money. But bear in mind that can hurt you a little bit with your offer sex appeal, if you will, because earnest money is a good faith promise to the seller saying, I'm going to follow through on this. I risk losing this if I wake up the morning of closing and decide that I don't want to close anymore. So the more earnest money that you put down, the more motivated and capable you look as a borrower and a buyer to the seller. So bear that in mind, but definitely compare and contrast those down payment assistance programs and make sure that you're asking these questions. Am I going to get all of my earnest money back? About how much are my closing costs going to be? How much can I get from the seller? Because there are limits as to how much you can get from the seller with these down payment assistance programs. So be asking your lender all of these questions.
I think those are all extremely brilliant points, and I'm glad to hear again Colorado, Nevada, and it does work very similar in many states that I've chatted with other agents as well. So in general, when you're considering buyer closing costs generally amount to somewhere between 2% and 4% of a purchase price across the United States. Here in Las Vegas, since we're not in an attorney state, meaning that an attorney is not needed to facilitate real estate, we as agents can do it. Then the closing costs are traditionally closer to 3%. So on a $300,000 price, you would know your buyer closing cost to budget for would be approximately $9,000. To a different point that Sev made about minimum investment, which is saying you got to have at least $1,000 of your own money in the transaction. That's called a minimum investment into the property. That is a lending guideline to how that program works. And it's absolutely an amazing point to bring up. So I'm glad that she brought that up as well. So it's important to know these things. And just as she said, I'd like to reiterate it again. If you have questions about how this works, there's a lot of ways to pull this off in negotiation strategy. Just make sure that you're having a conversation with your loan officer and your trusted real estate advisor. And I see that Sev has now decided to change up the backdrop. She's walking around here a bit.
My phone's dying.
Your phone is dying. Are you on the phone right now? Is that what you're on? Really? That's amazing.
Yeah.
I don't know. I didn't know you were on the phone. I thought you were on like a laptop or a webcam or something. So that's awesome.
Yep.
So Janice says, so with the virtual closings, would your keys be mailed to you? No. Your agent would still probably be giving them to you, taking them out of the key box and giving them to you. That's been what my practice is with people closing in COVID is just, hey, let me go grab the keys and drop them off to you, or, whatever is convenient to you. I've even did
in Colorado, the title company will actually hold them for you.
Oh, cool.
So the title
That's pretty
company
cool.
will give you the keys and help facilitate that. But yeah, you have a realtor for a reason. Leverage that, use that. Don't ever feel bad about having your realtor do their job. Their job is to make sure that you get the keys. That is what we are all working towards at the end of the day. So if they need to deliver the keys to you, at some point that day, or have them waiting for you at their office, or whatever it might be, putting a lockbox up on the property and giving you the combination and getting the lockbox later, whatever it might be. There are plenty of different resources that you have and ways about doing that.
At the end of the day, it's absolutely amazing because you can do so much with just simply picking up the phone, having a conversation. We as agents
I
can.
lost you on audio here.
Are you back, Sev?
Can you hear me?
I can hear you. Can you hear me?
I got nothing.
Okay. Oh, 1 second. 1 second. So this is the fun of live streaming. Things can happen. So I took Sev off screen. So let's see if we can get her back on screen, and this time with the audio working, so she can give us more of her wisdom.
Nothing. What?
What? Wow.
Oh boy.
Technical difficulties have been experienced.
I don't know what to do.
Try logging.
Muted it and unmuted it. I can't hear you.
Okay. Anybody else having audio issues that's on with us right now, not being able to hear either? Wow. Okay. So.
Oh boy.
Oh boy.
We might have to close it out. Can you hear me?
Yeah. I can hear you, yes. But you can't hear me? I can hear you.
I've never done a live on this before, so I don't know how to fix it.
I would tell you the log.
I know I'm a millennial and I should know a lot about technology because, I'm like 12. But I got to be totally honest with you, Andrew. I have no idea what I'm doing when it comes to technology, working it. Should I leave the meeting and then try to rejoin?
Yeah.
Okay.
Okay. Okay, so we'll see if she's able to join us in again. And I wanted to get on to some of these other questions. But Janice, sorry about the technical issues there. All of a sudden that popped up. Essentially, so many different ways to get your keys. Have the conversation with your agent. We're happy to facilitate and make it happen for you guys. Pocho says, the virtual choice would be so funny as a teacher in e-learning. My students, it would make a great option. Thank you. Okay, it looks like Sev is trying to come back. Let's let her back on.
Back. I can hear you.
Did that work?
It worked. It worked.
Well, there you go. As a millennial, you now know that the best thing is to simply reset if all else fails. So,
yeah, just leave the meeting.
Just tell me, I don't like the way this meeting is going. I'm going to leave. I'm going to come right back. I hope it's better whenever I come back, right?
Love it. Love it. Love it. Okay, what did I miss? I feel like I missed something good.
Oh, well, we were talking about the virtual closing, and the part that you missed that was good was you and I trying to figure out there for 2 to 3 minutes what happened. So, Oh, not at all. So Sam said, I watched your videos early in and learned a lot. Thanks for all of your videos. They are excellent for first-time homebuyers like myself. Thank you for the kudos, Sam. Really appreciate that. I have a feeling that everybody that follows Sev on her Facebook, where she does a lot of Instagram, excuse me, not Instagram. See, I'm older. I'm supposed to be the elder millennials. What this is, Sev. So I'm still like Instagram, Facebook, and now a TikTok. What? But what I'm
Yeah,
trying to
I
share with
know.
you, you do all the Facebook Live. You do a lot of videos on Facebook, and that's your thing.
Yes.
So that's really good, and I want to keep reiterating that because top agents, always have a niche in a way of core attributes of things that they do. Whether it's like a radio show with a nice lady out in North Carolina that'll be on next Monday, whether it's YouTube, such as myself, Facebook, video, such as Seb does. There's people that do Instagram. There's people that do blogs. Essentially, a top agent is always trying to educate you and make you a well-informed consumer, whether you're buying, selling for the first time or the 100th time. So I do want to say thank you, but I do want to give props to my fellow agents across the country that are hustling it every single day. And it just so happens that today you get to meet another one of them in Colorado Springs. So thank you. A-Flow, to answer your question short, will you be able to watch this video again? Yes, it will be very much a real thing after we end this live stream today on my YouTube channel and on my Facebook page. And if Sev shares it anywhere she shares, it'll be live there too. So you'll be able to go back and you'll have the ability to see all the live chat on the right-hand side. I always leave that enabled so people can see the engagement and see the questions and pick the parts where they want to zoom in at with the questions. So great question.
Love that.
Phyllis Bell Sutton said, yeah, it's very awesome. YouTube is really cool with live chat replay that way. Phyllis Bell Sutton says, thanks. Sorry I missed it. I'll watch. I live in Texas. Hey, no need to apologize, my friend. I just am glad that you were able to hit us up on the stream. And I just wanted you to know where it was located in the video for those specific questions to deliver the value that you were looking for. So thank you for joining us from Texas. Phyllis says, great advice. Absolutely. Made better with Sev being here today.
Oh, well, thank you. You're such a good
You're
host.
welcome.
Oh, my goodness.
Well, thank you. I appreciate that. Then everybody was letting us know that the audio was fine. Drew's like, hey, I can hear everything just fine. Janice was saying, I can hear everything just fine. And LaRon, one of my clients in contract at new construction, actually just a stone's toss. Well, maybe that stone's got to go a little way, but essentially new home construction not far from my real estate office. So it's really cool. So anyways, I think we are caught up, Miss Sev, on all the questions.
Beautiful.
So what I would like to do is just simply see what you would like to share before we adjourn the live stream today with everybody. If you have any parting thoughts about COVID, about Positive Mojo, or thoughts in general from Sev.
I think that right now with COVID, everything is happening on a pretty state by state basis. I think that whether you are looking at buying or selling, it is super important right now to maintain your flexibility as things are ever changing on a moment to moment notice. I know that right now here in Colorado, we're not allowed to show properties anymore. So if you want to see something, it's going to be virtually, and that's it. But that is exciting because we are adapting and implementing a lot of new tech to this industry. So for those people who do have to move and maybe PCS and purchase, without physically being in the property, there's going to be a lot more virtual tours and video walkthroughs and everything else available for you guys that might become a little bit more standard to have in the industry as I am seeing them become more affordable. But I think right now the most important thing is just to maintain a high level of flexibility and continuously be educating yourself. You can never ask too many questions. There is no such thing as a stupid question when you are looking at a transaction of this magnitude. So leverage your team, work with them, stay in communication with them, and weigh out all of your pros and cons, because While there are people predicting that the market is going to go totally south, there are also people predicting that the market's going to be better than it was when we went into this. But the fact of the matter is nobody knows what is going to happen. So you need to ask questions, educate yourself, and figure out what is best for you right now, and then play on that.
Thank you, Sev, so much. Yeah, a lot of wonderful insight. Again, if anyone would like to follow Sev and watch what she teaches people on her Facebook videos and live streams, again, her contact information is very much in the show more description. And just to give you an idea, again, you can easily find her by going onto Facebook. And there she is, Sevin Murdock. You see the correct spelling. And again, if you have a little bit of difficulty in the way you say her name, she says 786-543-27. Whatever works best for you. So super wonderful time with you today. You're always welcome back, Sev, anytime you'd like to join in. And we look forward to having you on in the future too. Thank you again for joining us.
Thank you for having me.
Oh, thank you so much. Our pleasure. And to everybody watching right now, thank you for staying in there with us. We'll be back on Friday with John Carr out of Ontario, California, Ontario, Canada, when we'll be talking about, is now a good time to buy a house? Stay tuned, and we'll see you again at 9 a.m. Pacific time on Friday, and be the reason someone smiles. Thank you for joining in. Enjoy a great day.
Thanks, guys.